What's up, everybody? It is Ted here with some bodies and wicks. How's everybody's day going? Hope it's going well. I'm doing another video on Bitcoin because you after redoing, or actually after doing my one from last night, I realized that for some reason the I don't know what happened. I started playing the music and the music cut down my mic, and you couldn't hear me. I mean, you could barely hear me, but you really couldn't hear me. So I'm gonna just do it again. I figured, why not? Um, I mean, what's the worst that could happen, right? Um, and I'm sitting here trying to play with this a little bit so it's not so, well, actually, I may need that gain back. 1 second. I'm sitting here doing things as I go. This is a DIY experiment. Um, because to me, my voice sounds a little bit echoey, but yeah, I'm sure you guys at home won't notice, or at least I hope you won't notice. But we will find out soon, that's for sure. Um, one more second, and I think that, oh, okay, that may be a little bit too loud. All right, I think that should do it. Anyways, back here with bodies and wicks. So what we are is we are, or I am a smart money theorist, which goes against everything that you're taught in retail, basically. So where you would typically think of as a line as support and resistance, may not be one in smart money. We don't trade off trend lines. We don't look for any kind of channels. There's no triangles or bull flags or bear flags or anything like that. That's going to give you a signal as to what to trade next. Instead, what we look for is that what price is going to look for, and price is going to look for areas of liquidity and also balance. So that's basically what price needs to do, is look for liquidity and balance. And what I mean by look for liquidity is by look for areas in the market to where you're gonna find, um, you know, people that would have, um, a buy limit or a sell limit sitting, or a buy stop or a sell stop sitting. Those areas are areas of liquidity, technically. Um, and so that's what we aim for, that's what we look for, and those are usually the targets, and then it's usually what happens after that is what smart money is. How are you going to play that? Are you going to go along with the you know this the retail theory, and which honestly it happens a lot, to where you'll see three highs in a row and you get near that area. Smart money would tell you basically wait, to see, and also a couple different other things. Wait to see what's going to happen with that price, before you think you're going to buy, because it could sell. But more than likely, it's going to buy, and it might take its time, or it might just shoot right through. So, these are the things that we watch for. We don't use a lot of the what what my mentor calls lipstick on the chart. However, I do use a lot of lipstick, but those lipstick is usually in boxes, horizontal lines and Fibonacci's, and that's it. There's nothing else. There's no trend lines. You won't find triangles. You won't find any of that. So, I played a message last night on my Bitcoin, the third video. This is third video again, or fourth video. Sorry, I lost count how many Bitcoins, but I keep doing Bitcoin because it moves a lot and it kind of controls the entire market. It helps out with the alt markets. And so I feel like we need to revisit Bitcoin at least once a week. So I played a little message from a highly respected smart money trader, basically giving you a lot of different what we call PDRAs, predetermined algorithms, or predetermined something algorithm. So basically, everything is an algorithm within the smart money markets, and that is every market. Every market is a smart money market. So the algorithm is, or basically the market is being controlled by the algorithm, and it's up to us to understand or look for the little hints and trails that the smart money leaves behind as to what price is going to do next, right? That's the basic principle of smart money. Okay. So like I said, I left a message kind of warning people about who is teaching smart money online, and what kind of vocabulary they're using, because they're using some bad vocabulary. Their their ideas are kind of right, but they're calling things that shouldn't be called what they are. For example, I heard somebody describe mitigation completely wrong. Mitigation is a block. It's a small block at that. It can be a small block. It's not like a huge area that you would find, on a chart that would arc over, almost 50% of, a high and a low. That is what we call, a discount to a premium array, is a high to a low or low to a high. I mean, so, anyways, in between, the low and the high, you could have a couple PDRAs, and that is what is going to set the stage as to where price is going to go next. So, let me go ahead and just go on over to Bitcoin and try to re-explain what I explained last night, except for this time, hopefully, the music doesn't drown it out. All right, so I'm bringing some music in, and hopefully it doesn't screw anything up. Because the only thing is that even though this microphone acts as a monitor, I still can't hear the music. But hopefully my microphone is loud enough to drown out the music. I've tested it a couple times. This should work. If anything, I'm actually lower than where I should be. But that's okay. All right. All right, so like I said, hello. I'm sitting here staring at the screen, not knowing what I'm doing. But we're gonna go ahead and head over to the charts, and here we go. We got Bitcoin right here, and Bitcoin actually, man, it made that spike today that had me a little excited for a second. But unfortunately, you know, due to due to some smart money tactics, I called 42 is going to be tough to get across, and here's why. And I'm going to explain it all over again. So I'm going to get myself off the screen so you guys can see the chart here. So I am on a 1 hour basis. And what I need to do is go to, I think, a weekly. Yes, weekly. Because we need to go to the area to where Tesla called that they'd be accepting Bitcoin, and all hell broke loose, basically. And that's this area right here. I mean, the whole week, you know, it kind of dipped down and started down here, which is interesting because it filled a full monthly fair value gap, and then it was introduced, and then next thing you know, Bitcoin went from, what was that? It was probably somewhere around 20,000. They're almost 30,000, about 28. And then it flew all the way up to the 40s, way past the 40s. And at this time, I kept myself in. Of course, you know, I'm just like you guys. I'm an investor in Bitcoin. And I try to be smart about it. Whenever I got out at 55 before the plunge. And I didn't get in back down in here. I wish I would have. I got in back about 35, so right around where we are. I was waiting for basically there's another fair value gap in between here and here. And I was thinking whenever this was pushing up that it was going to reject and come back down. And it did kind of move around in there to where eventually I jumped in around 35 before it went. And then I was like, oh, that, like, crap. I could have just set a limit at 33 and been happy. But anyways, the reason I bring this up is because we have this weekly fair value gap right through here, and as of course you can see, it bumps it. And fair value gaps, again, if you haven't heard me say it before, they act as magnets, but then it's kind of like when you put the opposite magnet together and they start to repel. That's what happens whenever they get inside a fair value gap. And sometimes they repel so hard that it goes right through the fair value gap. That's typically what you will see in a fair value gap, and I will show you coming up as it happened recently, well, probably within the last couple days. Doing a daily fair value gap, which was back here during the whole, well, actually this should be lower, should be right here. That is, you know, I need to put it on the magnet. What am I doing? Come on, Ted, you know to put it on a magnet. All right, so that is the daily fair value gap. And so now, as you can see, this is why I called 42 being really tough to be across. So now we're going to zoom in. I don't think there's much to see on the 4 hour. I'm going to have to... I know I have way too many things on my screen for you guys to follow along. And actually, I can probably get rid of some of these Fibonacci's and explain them as I go. So as I was going through here, I was looking for value gaps. Here you can see a couple highs, so I was looking for liquidity, and of course there was a small fair value gap in here. It comes up, hits another fair value gap, falls down into that fair value gap, bounces up, goes up above the liquidity, which is what you would expect, and then it pulls back. So it knocked out any kind of anybody that was had a sell limit, or anybody that had a buy stop. So knocked out both of those guys. Fair value gaps created in here, and of course, as you can see, it topped it, just barely touched it, moved on up. I can't explain every single curve or every single dip or going up in the market, but I can try to help explain at least as much as I know. Okay, so this came up to here, which is, I'm sure if I got down to the 1 hour, that would actually be some kind of order block that would prevent that from moving forward. Oops, we're looking at the wrong one here. So yeah, perfectly. So here would be your order block, these 2 green candles going up, and then you have the 2 red candles that are engulfing them or overtaking them, whatever you want to call it. So if you take that, move it all the way over, trying to get in a straight line here. There we go. And as you can see, it hits it, and then drops. So there's your order block, not allowing it to rise above that area. And of course, overblocks will get overtaken. It just depends on the bias of the market, and also whatever it's seeking. If it hits an order block and it's seeking liquidity, which there isn't much over here, there is some, but it's not enough to drive the market up. Instead, it breaks down, pulls up here, and hits another order block, looks like. And I'm sure if we got down closer where it says breaker, I don't think there was a break. I may have moved that. There was probably a breaker somewhere else and that got moved. Oh no, that is a breaker. Low, high, breach, lower, low. So once came back up into that area, it was a breaker and an order block. Breakers when you get a low and a high and then a lower low, and then your high is that breaker, and those usually act as support and resistance. If they can break through it, it becomes support. If it stays below it, it stays resistance. So as you can see, it came up here and tried to break through this so many times, and that was part of this green candle. And I don't even think it had anything to do with it being the order block. It could have, but it also had a lot to do with it being a breaker. So enough times of trying, of course, it eventually dropped. So then now we have liquidity here. So now I put balanced because after all that, it balances. So now we have 2 areas of liquidity. So that is something to look for, when coming to the future. we're going to look for these areas to be broken, because that is what price looks for. It looks for liquidity and it looks to balance. I don't know why I have these gold things in here, but there is another area of liquidity that basically went all the way across here. I can probably pull this over and show you. Well, let me get it off the... There we go. So all this is underneath the liquidity zone. Ooh, we got moved up a little bit. This is when I was deep in the 5-minute chart trying to figure out what was going on, but it just wouldn't break this. And again, here you go with the bearish order block right here. And I'm not for sure where this rectangle came from. It's been a while, so I'm just going to use that as the bearish order block area. Move it all the way across, even though it kind of overlaps a fair value gap. Doesn't matter. Bring it up. There we go. Okay. So again, breaker, boom, can't break it, drops again. And then of course, that's when we got into that low that probably freaked everybody out, right? The one that got to 30,000. So the reason it stopped, I wouldn't say the reason, but there is a good possibility as to why it stopped there, is because I believe this was either a weekly or a monthly fair value gap. I cannot remember. If I'd have to zoom out and figure it out. But generally what you'll see is once you see these dip this far into a fair value gap about halfway, boom, you'll see them turn around and rock it back out. Like I said, like a magnet, they pull closer together, you flip them upside down, then all of a sudden they repel. It's exactly what happened here. And then boom, this area right here, I don't even know what all these yellow lines are for. I'm gonna delete those. It's just more and more that you don't need on your chart. So now what we've done is we've broken market structure barely. We've broken a bit of market structure. So now you would expect the market to start going higher. Of course, it falls back, hits the top of the fair value gap, boom. Now it does start to go higher. Now you can see it start breaking more and more of these short-term highs. And here is where you really see this start to turn, because now you have this guy breaking this liquidity here, right? So once it gets down into here, breaks market structure, then you can see the bullish strength start to come in. And again, this guy coming up, breaking this liquidity here. Like I said, we're going to look for these in the future, all these liquidity areas. It's funny that this liquidity area didn't last long. This guy came up and just took out that liquidity. But now this guy did come up into this liquidity area and just took it out. However, there was a fair value gap that was balanced. However, the algorithm remembers everything. It knows where that fair value gap is at, and that's probably what rejected it out. Now, just recently, 3 to 84 days ago, what was it? The 13th. So 2 days ago on the 13th, we had the daily create a daily fair value gap. And I pulled this back probably too far. It's probably right there. So during the 12th, we had this come down. You can see that there is a bullish order block right here, and also a 4-hour fair value gap. If I went to the 4-hour, you would see a fair value gap with a red candle just below it. So see, there it is. There's the red. I don't know why I'm so far over here. Right here is the red, not the red. What am I saying? The 4-hour fair value gap. Actually, you don't even see the bullish order block. What you do see is this spike down here. This would be an area of liquidity, which I'm surprised it did not break. This candle's low, right, which was 34,635, did not break this low, which was 34,608. So we're about a $28 difference, something like that. I'm just doing math off the top of my head. Sorry if it's wrong. All right, so it didn't break it. So that was confusing to me, because I thought I'd at least break it just a little bit, and then go back up. So I'm guessing that, I don't know, that maybe that order block held and didn't allow it to get, yeah, that's what it was, is that the bottom of this was the order block. So the order block held. If it goes all the way through the order block, then you would expect prices to start wanting to go lower, because it broke market structure. So the market structure here is the order block itself, and if it would have broke that, you would start to expect lower prices, but instead it popped right up. And as you can see, the 4-hour fair value gap being the support here until boom. Like I said, the fair value gaps, they want to act as repellents. Until they act as such a repellent, they just slide across to the other side. Rarely do you see this to where it kind of just floats up through and across, but at this point it's balanced, so that's why you see it kind of float up and across. It's not in a hurry now that this area is balanced because of the 4-hour gap. That, and also if we do a fair value gap from here to here, let's put on the old magnetizing magneto on. You can see that it does come up and across, and it comes down. And when it comes down and it doesn't break this, or it doesn't break lower than this order block, it does hit the 50% mark. So whenever you see like a large, like even this right here, whenever you see a large engulfing candle, you'll usually see at least a 50% pullback. And also mentioning the fair value gaps, you'll usually see about at least a 50% dip in. Right? And all of this has to do with balancing, right? The 50% does have to do with balancing. Now the smart money comes in is if it gets lower than 50%, because that's when they're going to be, willing and able to buy. They may buy actually above 50%, but there has to be certain conditions that has to be met. So now that we've gotten above that, right? So now let's move the fib. What used to be this here, well, actually yesterday when I did the video, it was right around, I'm not for sure. When did I do it? Let's see here. Well, I had to have this. I remember it broke through the daily fair value gap, and jeez, come on. It broke through the daily fair value gap, and it hit the this one right here, this daily fair value gap from way back in the day. Okay, I'm not gonna go that far back, it's gonna take too long, but you remember me seeing it. Come on. So it touched that. I think that was, and I got a hold of another Fibonacci that I didn't even know existed. All right, let's click this one, and I think it was right here. And I was talking and I was saying, okay, we're probably gonna see either bounce through here, and we're not going to see much, or we're going to see some sideways action. It could push up into this fair value gap. Once it does that, it's probably going to have to fight like hell to get up to the next resistance zone, which is going to be this right here, which was the weekly fair value gap. And I have it numbered here right, almost right at 42,000. So that's what my video said yesterday. It's going to be hard to crack 42,000 because you have, a fair value gap within fair value gap. Now let's look to the left and let's see if there's any possibility of it getting back up to that way. And there is. I remember drawing this yesterday. You do have a slight bit of almost equal highs, which would be your liquidity draw. So that, plus all these spikes here, each of these could be a liquidity draw. Each of these could be where somebody, probably the highest one, probably this one right here, which I am going to horizontal ray it. All right. This is going to be your next area that I think that smart money is going to be looking at once it actually gets past or gets near there. And look at that, exactly the 162%. I don't know, the Fibonacci amazes me sometimes, especially the extensions that I was taught to put in for smart money. It's the 27, right? The 50 and the 62 of any multiple of the 100s. As you can see, I have them going on up almost forever. So I have 162, 200, 227. I don't have the 50s marked out. The 50 I usually have marked out just after the first one. Just so you can use those as projections as to what you may be looking for as far as a target to go. And considering this right here lines up exactly with the 52%, with the fib starting down here after all this is balanced, after we've created the daily fair value gap and we're getting up into this fair value gap, I would expect I would expect it to at least get to this fair value gap and possibly pull back. Now you got to think, both of these fair value gaps that I've drawn here have been I guess you could say balanced. They were created on the way up and they were broke on the way down. But when they were broke on the way down, look at this, they had to fight to get all the way down through it. You can see it got almost halfway through, it would bounce up, halfway through, bounce up, fight, and then eventually that magnet would just push it out. And then as you can see, it would try to come back up, bounce down, try to come back up again, bounce out. And so eventually bounced itself out to the bottom of that fair value gap. Now we're coming back into it. So it's balanced, but again, the algorithm remembers everything. It remembers every little detail, every price, area to where something happened, and it's going to continue doing that. So now, the best thing that you can do is rely on your fib. At least that's what I would do. And I'm still on the 1 hour chart. I personally would expect it to fall because we haven't got into this daily fair value gap just yet. If I went into the 5 minute, let me see what's looming in here. And look, we even have a 1 hour order block. Let's stretch this thing out just a little bit. Remember Stretch Armstrong when we were kids? Those things are awesome. It was like a silly putty. I don't know. It kind of felt grainy too, and you could just pull it and it wouldn't break. But I remember one time we had one that did eventually break, and it had, I don't know, it just went all over the place. Anyways, I'm getting off track here. So here we go. We have the daily fair value gap. Yes, it looks like the 5 minute 5 minute candles dip into it just barely a couple times before the price did take off into, and it just ran right here into this fair value gap, creating another fair value gap. What do you know? But this one also seemed to get balanced as well, and running up through it again. I wouldn't worry about a fair value gap issue here. Come on now. I don't want to reset the chart. I don't know why you're doing this. This is kind of ridiculous. Okay, I'll just reset the chart. How about that? I'll make you happy. If that make you happy. Okay, I can't click anywhere without this thing. Here, stay over here. Oh, there we go. Really? Okay. So today, we had Bitcoin get all the way up into 43. This guy could actually get out of the way. I would know. Okay. Sorry, not 43. Hello. 41.32. Is that what the high was? 41? Yeah, that's what the high was. 41.32. So we're inching closer. We are inching closer. But don't forget there's a daily fair value gap below. Right? So I wouldn't be surprised if this thing takes a dive and then comes back up. I'm not the foreseer of the future. I'm just trying to use my logic as to what could possibly happen. I mean, you have a fair value gap here, a 5-minute one at the very least, and as you can see, it pushed up into that fair value gap and then pushed it down, pushed it down quite hard. So you never know what these fair value gaps are going to do to price and how they're going to push it. Just know that they're there, and when they get close to something, be prepared for a reaction at least. I'm trying to see if there's anything else to watch out for, like a breaker or I think that could have been one right here. You got the low, the high, the dip below, down to the bottom. And as you can see, that area where that breaker would be is where that fair value gap is. So maybe watch out for this breaker too. As well as, while we're at it, let's just go ahead and throw on the fair value gap here. Let's change color up a little bit so we know it's something different, and I'll label them too. Let's go with gold, and let's go with the purple. There we go. That'll look great. Look great on my 4-door sedan. Toyota Prius, nothing can beat it. All right, so that gap, so for that's not capitalized. I'm very 5-minute. Oh, and quick tip, I'm sure I told you guys this before, but if you ever need to know what's going on with all of your lipstick that you put on the charts, you can literally go to object tree and check out each one of those, and you can name them. You can name them like this one. I can do FEG5, and then if you want to group things by day, what you can do is, what just happened here? Okay, I guess I just made 2 FG5s. So actually that's perfect. So now I can do an example. You can do a create group by drawing, right? And you can say 5 teams. So FEG daily. And if I'm not mistaken, I probably have folders down here. No, I don't. So go with create group of drawings, and then